Interest rates are at an all-time low. That not only benefits future home buyers, but current homeowners that are looking to refinance. So in this video, I'm gonna be talking about, should you refinance now or should you wait? If you go back and you look at interest rates over the last 50 or so years, you can actually see interest rates are at an all-time low right now. Given the last couple of years, we've seen even lower interest rates, but generally speaking, rates today are at an amazing rate. And so many people are on the sidelines waiting, thinking that they're gonna get better when they could be capitalizing on today's opportunities. And like I said, in today's video, we're gonna be talking about, should you refinance or should you wait? Now, a lot of times that answer, it depends, because everyone's situation is gonna be a little different. Whether you're looking to refinance to lower your interest rate, or maybe shorten your term, taking you from a 30-year down to maybe a 20 or 15 or even a 10-year mortgage. Or maybe you've got some credit card debt or student loans that are just hanging over your head that you want to just get rid of and pay off. Or maybe even renovate your home. So when it comes to refinancing, in my opinion, there's not one blanketed answer. Your friend could have refinanced, your cousin could have refinanced, all for different reasons. Your reason is going to be completely separate and independent of everybody else. And this is why I stress getting with a good mortgage lender that can give you your options and really find out what's your motivation as far as the refinance goes. Now, a lot of times I know it's really tempting when you get those advertisements online, when you're surfing the web, refinance at 2% today or whatever crazy interest rate that's out there. That's some good bait to get you to reach out and maybe actually start thinking about a refinance. But to me, making the decision whether or not you should refi or wait comes down to a few things. Number one, if you're looking to refinance on a rate and term refinance, which is essentially you're either lowering your interest rate or trying to shorten up your loan term, the general rule of thumb is if you can save about 0.5% to 1% on your interest rate, it's usually worth taking a look at that refinance. Now, if you're shortening the term, that sort of depends as well, because obviously if you're shortening your term, the chances of your payment going up is highly likely. It all depends on when you purchased your home, how long you've been in your house, what your current interest rate is. So there's a lot of factors that will go into determining what that end payment's gonna be. For example, last year, right before COVID, I was actually refinancing my house. And I was gonna go from a 30-year mortgage down to a 10-year mortgage. And I believe my payment was gonna go up about $300 or so a month. Now, I was looking at the fact that interest rates were in the 2s at that moment. And I was like, shoot, I need to take advantage of this. And if I can pay my house off maybe in the next 10 years, I might as well just take advantage and lock it in and get it done. However, there are other options available as well, because not only did I look at shortening my term, I had a couple $100,000 of equity in my house. So then I looked at, should I do a cash out refinance, which leads me to my second point. The other type of refinancing that you can look at is a cash out, where you're tapping into the equity in your property. Now, when you look at this type of refinance, again, there's a number of factors that go into it, because if you're tapping into the equity in your home, your loan balance is going to increase, which means your payment is probably going to go up. Now, this type of refinance, you're looking at some debt consolidation. A lot of people will take their credit card, throw it into the mortgage, pay that off, pay off a car. Some people will take that money, invest it into other real estate, other investments in the stock market, crypto. There's so many different things that you can do with a cash out refinance. Renovate your house, right? During COVID, that was another popular thing. I renovated my entire house the other year. Those are just some improvements that you can make to your home by using the equity in your property. Now, in that instance, you want to look at the numbers, right? If you're paying off credit cards, what's your current interest rate in your credit card? 15, 20%? Can you lock in a lower interest rate on your mortgage to improve your overall cash flow to then maybe try to pay your house off faster? Or maybe you've got student loan debt that's just hanging over your head and you just want to get rid of it. So I think when you look at a cash out refinance, there's a lot more that goes into it than just what the interest rate is. There's a lot of factors that you want to look at: your cash flow, what your new interest rate's going to be, how fast can you pay the debt off, and most importantly, what does that do for your overall financial picture and your financial goals? So when you're looking at a cash out refi, I highly suggest getting with a lender who truly understands what your motivation is and what your goals are. And if they're not asking you those questions, you as the borrower should definitely make sure that you're going through that checklist with that loan officer, because you don't want to just get into a refinance and cash out $10,000 on your house when you could probably just get a home equity line of credit and you could get the money in a week. So the rule of thumb is if you can save anywhere from 0.5 to 1% on your interest rate, you should probably look at the refinance. If you can take advantage of interest rates and shorten your loan term, that might be another option to look at, especially if you're maybe towards the tail end of your working career and maybe you got another 10 years left in your work and you want your house absolutely paid off before you're done. You might want to look at doing a 10-year mortgage. So again, there's a lot of options when it comes to a rate and term refi. On a cash out refinance, what are you trying to accomplish? Is it debt consolidation, home improvement, investing, whatever that is? Run the numbers. If the numbers make sense, then go ahead and look at doing the refi. Don't just refi for the sake of refinancing because interest rates are low, because when you refi, remember, there's still going to be closing costs. So you don't just get to refi for free. So make sure you run the numbers and it makes sense. So those are 2 refinance options that are out there, and my words of advice when it comes to the rate and term and the cash out. And again, this is where we specialize in doing these types of analysis for you folks. So if you're thinking about refinancing and you're not sure where to start, by all means, send me a text, send me an email. I'd be happy to schedule a call with you just to get an idea of what your goals are. And then we can put together our total cost analysis that we can then review with you. It's a super cool chart that we use. That way you have a really good idea of how your money works and what the new mortgage is going to look like, so you can make an informed and educated decision on your refi. So I hope this helps you understand the refinance process, whether you should do it or maybe you should wait for the right time and the right loan program that's going to fit for you. So I thank you guys for watching, and as always, I'll see you on the next one.